You know, in the financial markets, every massive shift, every seismic event, it always starts with a tiny vibration, a signal that only the most tuned-in investors can really feel. Right now, one of those vibrations is building into a full-blown earthquake in the crypto world. And it's all centered around a new wave of investment products that are poised to change, well, everything.
This isn't just a saying. It's genuinely how the real winners are made in our industry. And the signal we're seeing today, well, it suggests a colossal shift for crypto is just around the corner. And here it is. This is the epicenter of that earthquake. 155. That's not some random number. That's the unprecedented, record-breaking number of altcoin ETF applications that have just been filed with the SEC. It's an impossible-to-ignore signal that a massive change in how Wall Street sees crypto is happening right now.
All right, so let's get right into it. This isn't just another market trend. It's a seismic shock that's reshaping the entire investment landscape. But to really grasp what's happening now, we've got to look back.
You see, the events unfolding today aren't exactly new. They're part of a repeating cycle of financial innovation and adoption that we've seen play out time and time again.
There's a classic saying in finance: history doesn't repeat itself, but it often rhymes. The process of financializing a new asset class, it always follows a predictable script. It starts with skepticism, then comes gradual acceptance, and finally, a massive flood of institutional capital. And we have seen this exact rhythm before.
Just look at this timeline. Back in 2003, the first gold ETF completely revolutionized commodity investing. Then in 2024, the spot Bitcoin ETF legitimized crypto for institutions. And now, we're standing right on the doorstep of the next huge wave, altcoin ETFs. Each step builds on the last, opening the door just a little wider for institutional money to pour in. I remember the debates back in 2003 so clearly. The so-called experts were arguing fiercely. Gold is a safe haven asset. Why would you trade it like a stock, they'd say. ETFs are for equities, not commodities. It was dismissed as a crazy idea. But then within just 2 years, the gold ETF, GLD, had pulled in over $10 billion, driving the price of gold up by nearly 40%. It became one of the most successful financial products in history.
And that is the entire point. I'm not telling you this story to talk about gold. I'm telling you this to prove that every single financial revolution starts with skepticism. Bitcoin was called a joke, altcoins were dismissed, and crypto ETFs were rejected dozens of times before the door was finally kicked wide open. You know, when the spot Bitcoin ETF was approved, I told investors that this was just the opening act. The real game was going to begin when altcoins were financialized. And now, here we are, 155 altcoin ETF applications flooding the SEC. This isn't a coincidence. It's a strategic, calculated move by the biggest players in finance.
And just look at the names involved here. We're not talking about some obscure projects. We're talking about core infrastructure like Ethereum's Layer 2s, DeFi leaders like Uniswap, and major platforms like Solana. These are the assets now being packaged for multi-billion-dollar funds. Just imagine what happens when even a tiny fraction of traditional ETF money flows in.
So, that brings us to the core question. Why is this happening right now? What's driving this sudden, intense thirst from Wall Street? The answer lies in one simple, but incredibly powerful motivation. I want to share a quick story with you. It's from a business trip I took to New York back in 2022. I was in a meeting with a firm that manages over $300 billion, and they asked me a question I will never forget. He looked me right in the eye and said, "We're sitting on hundreds of billions of dollars, but we are running out of new asset classes with enough profit margin. If crypto gets regulated, how deep do you think the institutional market will go?" From that moment, I knew. It wasn't a question of if anymore. It was a question of how.
And the answer to how is the ETF. Wall Street's logic is brutally simple. 1, they need new assets to grow. 2, crypto is the fastest growing market on the planet. And 3, altcoins offer the highest potential returns. These 155 filings are the inevitable result of that logic. This shift in thinking is happening everywhere. A fund manager I know in Singapore is the perfect example. His transformation really captures the entire institutional journey. Back in 2019, during an asset allocation meeting, crypto came up, and he just dismissed it out of hand. Crypto, there's no way we can justify holding an asset like that to our shareholders. And that was the prevailing attitude then. Cautious, dismissive, focused on traditional risk management.
Fast forward just a few years, and that same man stood up in a meeting and said, if we don't have exposure to the Bitcoin ETF, we are falling behind. So what changed? It wasn't him. It was the market, all thanks to one thing, a licensed financial product.
The ETF is the bridge. It connects the highly regulated world of traditional finance with new, non-traditional assets. It's the system's official stamp of approval. It says, this asset is now accepted. This asset can be put in a portfolio. This asset meets the standard. These 155 filings mean the wave of acceptance is here.
And this creates a powerful force that a lot of people miss: institutional FOMO, the fear of missing out. No fund wants to be the one explaining to their clients why they missed out on the biggest growth story of the decade. We saw it with tech stocks, and we are seeing it with crypto right now. The race is on.
So, with the race officially underway, the natural question is, which altcoins are leading the pack? Which names are most likely to get the first ETF approvals?
First, you absolutely have to talk about Solana. I remember back in 2021, after the network outages, a lot of people wrote it off. But in finance, what really matters is resilience. Solana rebuilt, upgraded, and became one of the most active blockchains out there. That's the kind of battle-tested asset that serious institutional money looks for.
Now, the approval of the spot Ethereum ETF was a true watershed moment. It wasn't just about ETH. For the first time, the SEC implicitly acknowledged that a utility token, the foundation for a vast digital economy, is an investable asset. That decision didn't just open a door, it blew the door clean off its hinges for everything built on or inspired by Ethereum.
That includes Layer 2s, staking protocols, Oracle networks, and the DeFi blue chips. Suddenly, the entire altcoin landscape gained a new level of institutional credibility.
So in my analysis, the next ETF wave will fall into 5 logical groups. First, the platforms, like Solana with their established ecosystems. Second, infrastructure projects, like Chainlink that the market depends on. Third, DeFi blue chips with proven financial models. Fourth, Layer 2s, which are the natural extension of the Ethereum ETF. And finally, the category with maybe the biggest long-term potential, real-world assets.
Do not sleep on RWA. This is the tokenization of things like bonds and real estate. Major banks are already running pilot programs, and the protocols that facilitate this, like Chainlink, will become indispensable bridges to the traditional financial world, making them prime ETF candidates.
All of this, the history, the institutional moves, it all leads us to the most important part. What does this earthquake mean for us, for the investors watching today? What is our opportunity in this news cycle?
This table says it all. The biggest winners are always the ones who position themselves before the institutional floodgates open. For gold, that was before 2003. For Bitcoin, that was the 2018 to 2020 period. For altcoins, the window of opportunity is right now.
Let me draw one more historical parallel for you. In the 1980s, a regulatory change allowed U.S. pension funds to invest in stocks. What followed was a 20-year bull run that saw the S&P 500 increase by nearly 1,000%. A single shift in the financial plumbing unleashed a generational wave of wealth creation. The approval of crypto ETFs is a shift of that same magnitude.
And crucially, these events don't create short-term spikes, they kick off long-term growth cycles. The gold ETF led to an 8-year bull market. The Bitcoin ETF cycle has only just begun, and the altcoin cycle, given the pace of innovation in this space, could be even more powerful.
So, I'll leave you with this question. 10 years from now, when we look back at this moment, the moment the full financialization of crypto began, where will you have been?
Will you have been an observer on the sidelines or a participant in the arena? Will you have been the one paralyzed by old narratives of risk or the one who acted when history presented a new opportunity?
The signals could not be any clearer. 155 filings have been submitted. Institutional money is lined up on the sidelines. A new, powerful growth cycle is beginning to unfold. The future belongs to those who understand capital flows and who see the signals before they become headlines.
The opportunity is right here, right in front of us. This isn't a prediction, it's an observation of a tectonic shift that is already in motion. The rest, well, that's a choice that's up to you.